Hello. Oh, it's another day. So you said in this video I will be showing you how to spot as the correct zone and what I look for in the market and what I mean by if market need to clear out the liquidity first. Okay, like I said in my previous video, I said if you come to the market, what you look at first is the market trend. You see, market was clearly going to a downtrend in this place, which is creating a this is a low, this is a high, lower low, lower high, lower low, lower high, lower low. That's how I get the break of structure of this. That's how I get the break of structure of this downtrend. The reason why I place this short here. The reason why I place this short here is because of this what the market was creating. So then market did not push down. If you check my previous analysis, you see that I was telling you that here is a key level as well. So market might not push down. So I target little, but this is about 460 pips. So then I left the chart because I was seeing the move. Market want to change character. Before you know, market break above all these equal high here. We simplify that market is likely to go back to an uptrend. You get me? Market is likely going back to an uptrend. And the amazing part is that this analysis and this strategy work in any time frame. But you just have to know what the market is doing in the higher time frame as well. Because this is a 15 minutes time frame though. And the setting on if you go to 30 minutes time frame, you still see it clearly, right? So the make strong reason that I believe that market is going to an uptrend. You see, oh yes, a key level market have tested it. Now it's try and push back uptrend, right? So that aside, that is just you have to spot all those markets, know where markets should testing the key level and all of that. But concerning my strategy, so I already saw that have markets trying to change character. Then and I still pay attention to here. You see that this is something like an reversal trend, right? It might not be clear inverted head and shoulder, but you see market come like this. Let me see that is the shoulder. Here's the head. Here's the shoulder again because it's equal. This here and here is equal. Why here is the head? So you need to pay attention to know what the market is doing first. That is the priority of a trade. You need to pay attention. So you will add all your strategy together. But if you understand a market, how market move already, concerning my strategy, I work with recent support. If you some people will like be some people might be using this support. But me, I work with the recent support to draw my Fibonacci retracement, as I said earlier before. You see, like market break above here, ma- got market retested to this base, break above, which is break above here. So once market take out this zone, so I'm clearly see that okay, this is a break of structure and a likely change of character because they are taking all those side, the previous side, which is and it was a equal high. So after then, what will I be looking for? How do I spot out my liquidity? You see what I was saying earlier before. I said how I spot out my liquidity is that once market breaks structure and retest back, the first retracement, that's where I spot out liquidity. So if I have to tell you now, many buyers will enter from this engulfing candle here. this bullish engulfing candle. Before you know, market push like there will be expected TP here. Because now all trader mentality is to expect TP. There will be expected TP here. But market will not get to that TP. Market will retrace back and wipe them out. And second thing you must know in the market, if market breaks structure, it did not retest back to that structure it break. That structure is not valid. Let's say for example, the market break this structure right now. It did not retest step back inside this zone. That structure is not valid. Only what I will make me to know that market will move this impulsively. Let's say for example, market break this structure like this now. It retested back inside this structure and move. You will know that market did not create anything liquidity. It retested here. The structure have already been retested. The structure have already been retested inside. So the structure is valid, is validated. So now the market can move impulsively. But in this scenario, you see that market broke the structure like this with all this candle, right? Retested, market retested, but did not get inside of the structure. That means this structure has not been validated. The structure has not been validated. Now, many people that do not understand market movement and break of structure and all of that, and valid, what even make a break of structure valid, you will see that they will enter from here. You enter from this candlestick, this engulf candlestick. Before you know, market will create this one long candlestick. Say, this market is really going up. It will create this another momentum, and it will just literally drop down. It will be dropping down. Before you know, it will clear out this early bias here. That is the reason why I use layer as liquidity. Because some people mark out liquidity because of the long candlestick that's rejected and move back. But me, I can mark out liquidity because of the early buyers and the early seller, which is market has taken them out as well. This liquidity sweep simply means that market have taken out some people to move in impulsive move. So in this scenario, I'm not using just a weak candle. It might be a weak candle, it might be a body candle, but market need to take out if the early buyers and the early seller. But in this scenario, I want market to take out this early buyer that enter from this zone because this market did not validate this break of structure here. So with that, I'm expecting market to, you see, I mark out here as liquidity. Market move. So now I'm waiting for market to take out this zone, retest back inside this boss. So me, I like I said in the previous video, I normally use the third line, in my feed. I normally use the third line in my feed to enter my strategy. I can literally place a order and market will trigger it and move up. But in some scenario, market will not get to this very third line. Just like here, I'm seeing here as I'm seeing this over here now, this red candle that market created here. I'm seeing it as an order block because market might try come and test it because first here's the last and what you still need to watch out in the market is that before market is moving impulsively, at least let the market to retrace back to the candle, which is retracing back to the candle in the sense that if the last bearish candle market created, let it to retest back to it. This was the last bearish candle market created. At least let the market come back to retest it. It will say bearish candle to know that this so has been validated. You get me? Let's say for example, market creates this bearish candle, right? This red candle, this bearish candle, right? Started moving impulsive move with bullish candle. They retrace back. Did not get there. At least let the market to retest back to the bearish candle with another bearish candle to violate that this zone, this candle has been validated, so we can move like the body have met together. Body in sense that like I've met my neighbor, like this like I'm a bearish candle, I'm a good candle, and I have never I did not test the work of my body to move impulsively. So If markets retest back to here now, retest back to this bearish candle, I can literally enter because if I have an entry point. But in other sense, I I mostly enter this test Fibonacci retracement because they give me a entry zone. Like I said before, I can even literally place a market order, either being buy limit, sell limit, and it will trigger me in. I just need to place the right SA. And in this scenario now, the reason why I'm still expecting market to get to even validate this other block here, this little candle here, big one. If you mark out here, you see that market did not. Let's so if you mark it like this, if you mark something like this, that was the last week market created, right? Which is the last bearish candle. And if you mark it, this was the second candle, the nearest thing market created. If you see inside the boss, so inside all of these balls, markets have never mitigate anything. So now I'm expecting market to mitigate inside this ball so that to validate here. If some scenario that market did not get to this zone, even if market gets here, like market get to this very line, so to this very zone, and I have entry, and I'm seeing like the reason to go in, I will go in because now I'm entry with a confirmation entry, and secondly, I have reasons that market have mitigated the both stroke in mitigated the candle, and thirdly, markets have validated the brick or structure, then can easily go. So if some scenario that people do not understand how this market work, some people will enter from here, from this break or structure, right? Which is for the break and retest strategy. Some people will enter for this break and retest now before you know market will dip in. For the support and resistance nigga, they will be waiting for market to get to this support. Market will not get there. Before you know, you will miss trade. That is the reason why I can easily cut trade. You see how market manipulates. For the people that are using break and retest, it's a scenario. They will be waiting for break and retest. They might even really enter here. Market will get here. Like just like market getting now, they will say market have retest now. So let me enter. Before you know, market will dip down to take them out away. And for the support and resistance, people will be like, oh, let me wait for the support, and for the support, the market will get it. And before you know, market will not get to the support. Market will just respect some zone. Market will just respect. Market will even get to the middle of the chart and start moving back. But you will not know the reason why the market is moving back. That is where this Fibonacci comes in. Let's say for example, let's say for example, let's say for example, now everybody now this market already break the structure and retest now the break and retest people now will enter from here, right? Break and retest people will enter from here. Before you know market will move up. They will take market is truly moving up. Before you know, market will take them out. And for the support and resistance, let me say yes, the support now. They will be waiting for okay, since the break and retest people have been taking out, so let's wait for the support. Market will not even get to the support. This very support now, I'm pretty sure that market will not get to the support. Market will just reach like something middle yet right now, something middle yet. Before you know, market will move up. Then you will start saying, market don't get to my support, I meet this trade. But you don't really understand why the market moved to that extent. Now, markets have already created a support which is valid. Market created a resistance which is valid. So market created this break retest which is not valid here. Just what market needs to make it valid now is to retest back inside the break of structure, which simply means that something like it. Once market retested back inside this break of structure like this now, Once market retest its highest break of structure like this now, let me change this color. Once market, so once market break the structure retested inside the zone, before you know, market will spike up. Then market will spike up now to take out people that enter from the resistance to create another break of structure. That is how I cut my moves. You get me? But now, for the support and resistance guys, we'll be waiting for here. Market will not get here. For the support and resistance guy, we'll be waiting for here. Market will not get here. For the break and retest, market have taken them out. Why? Because they entered too early, and now this zone has been validated. That's the reason why if market is creating a break of structure, it must create a little zone to fake out people. And if you want, like people, I see that they still cash move. Is like if you work with support and trend line. If you look at this trade now without even drawing the trend line, you see that the trend line has already corresponded. You see, very easy to understand. You see, the trend line has already been corresponded. That's the reason why some people that work with trend line make like cash move more than people that work with support and resistance. Because markets like I analyze this chart without trend line. I never even like I know that basically most of my chart work with trend line, even if I did not even draw a trend line. So you see the reason why I mostly work with the third Fibonacci retracement, the third line, which is the 0.5. Because now I did not drop in trade line, but I already know that market will get to this certain place and make impulsive move, right? So now I draw a trend line. You see, it still respected that third line. Also, many people that is waiting for your support now, they will miss out the trade. While many people that enter too early, they will be faked out. They will be used as liquidity. That is the reason why sometimes if I analyze, I always mark line and write SS inside, which simply means a sign a bunch of money will be swept out. You get me? So that is just how to spot out all these little things in the market, and it's really easy. And if market gets here, sometimes if market gets here with a let's say bearish candle, right? If like watch how what the market creates, watch what market creates here. If market creates any entry for your enter, place the right essay. Do not wait for do not wait for chart pattern before you enter the chart. If you are waiting for chart pattern, this market will leave you behind. Like chart pattern is good in some scenario, right? It's good, but I'm concerning this strategy. Like once market violates that zone, it triggers up easily. It did not even take like that's the reason why my analysis mostly play out easily. And thirdly, what I will still tell you that learn how to target little time frame resistance or support. Because if you are targeting for hours time frame, market still respect all this little time frame. But get your zone from the 4 hours, get your zone from the 1 hour, 30 minutes. But if you are targeting zone like the profit target you are targeting, the take profit, make sure that you are targeting at least 5 minutes to 15 minutes target. Like this one now, yeah, where I'm targeting here now is 15 minutes. It's 15 minutes. It's 15 minutes resistance. But some people want to target the all-time high. And if your psychology is not built enough, let's say it will evil players, but if your psychology is not built enough, you must have done a wrong thing before the market will evil players. And that thing have it really hit me hard. If not, just like psychology in trade is even bigger, is a very big thing that you need to understand. Psychology in trade is really deep. You feel me? So learn how to target the little time frame. Little temporary resistance it might even be 5 minutes. If sometimes in something row, if market get to this zone, right, this zone right here now, I will close because there is the 5 minutes resistance already now. Let me go to 5 minutes. Let me tell you what I'm telling you. Show you what I'm telling you. You see, it's a scenario. If market gets here, right, this like if market get to this zone like this now, I will close because now I already see the reason to close. I might not even wait for it to get to this resistance. But the main purpose is that at least I'm making something impressive, and that will be over. Let me, if it's good, this will be over how many pips? This over 500 pips. So you see, before you even catch 500 pips on gold, you really need to be smart enough. That's the reason why most of my trading they hit over 500 pips. You think that maybe this guy. Thank God I'm analyzing this market now. This is Saturday or Monday. You see how this analysis will play out. Just watch out the analysis. You see how it will play out. Like it's what we do consistently. It's not a guesswork. It's not a guess body of work. You get me? So it's really easy to comprehend. So that is what I'm trying to tell you in the other state of mind. Learn how to target the lower time frames either as your target. If you want to be an intraday trader, if you want to trade as just a day trader, you don't want to be holding trade for too long. Because if you want to be holding trade for too long, it affects psychology a lot. And I have like the thing I've dealt with me. I really want to change. I really want to change from holding too long, trade too long because that thing dealt with brain. You might even start doing wrong thing even when you know you are doing wrong thing. You just still do it with mistake before you realize, I did wrong thing here. Doing wrong thing in forex that you are losing money. Any wrong thing you do that it will cost you money. So that is the key part of probability is to fight at the psychology and risk management. Then have a strategy that is good enough. Have a strategy that is good enough. That is good enough that you can literally place at often. It's not a guess body of work. You can place at often and learn how to still take what market is giving you at a time. Watch what the market is doing at a time. Target the lower time frame for resistance and support. Don't target the higher time frame too much. But if it's needed, you can. If you know you can, okay, I'm like my psychology is strong enough to hold this trade. You can do it. That is not a bad advice as well. Like they do play out. Like even if I analyze from 4 hour too now, because this analysis now is from 30 minutes and 15 minutes. This very analysis right now. If I still analyze from 4 hours using this a strategy, this a analysis, the 4 hours it must still play out. And I can bet you that if I analyze up to 10 pair, at least I if I will my 5 of my analysis must play out, and with a win ratio of 1:4, 5, and 6. So you get me. So you get me. Like it's a guarantee something that if I analyze a 5 trade like this, if I analyze a 10, if I analyze 10 pairs, if I analyze 10 times, five five inside that team must place out, and that five that we play as must give me more than 1:3 to 1:4 or 1:5. So it's a skill of probability, but to master the skill is still really quite difficult. Even me, I face that a lot. The psychology part of the trading, I face it. You get me? I face the psychology part of trading very well. But I pray it's time. enough. I should master the psychology behind it and just execute and let my market and my mindset be free. Because sometimes I do even still execute, then I don't want to give back profit to market. You see, I'm will be running out of the market. And instead of to make some quite interesting profits, before I will just make little one. So one battery can take it again. But if you like really want to build a strong mindset in the forest, like just let your analysis to play out. And then after then I see my analysis play out, now if I have to calculate everything, you know that I was supposed to be in big win. So all those things, I'm still working them in. Feel me? I'm telling you all this in case you experience them, you know that it's a forest life. You will experience it. You can't even skip it. You can't skip it. You get me? Get me? You can't skip it. It's forest life. You can't skip it. You face the psychology because me myself I face it. I won't lie. It's not even. It's not a hidden something. You will face the psychology. Even if like your analysis will plays out, the psychology will still come in because the psychology now you are working with money, so you are confused in a certain time. Like, should I take this money? Should I leave it to run? But I will bet you that if you can fight it, your psychology, work with risk management, and use my strategy, extremely profitable. You have it. I'm telling you, real life shit. If you analyze 10 of my analysis, be expecting 1:4. I'm giving you a guarantee that 5 months plays out. If you understand the candlestick and what market is doing, I'm telling you that 5 to 6, like even more than 5 will play out in that analysis. But at least target a some certain zone. Don't let if you want to target, at least target the lower time frame analysis and lower time frame resistance or support, which is in longer time frame. I'm not even talking about the 1 minute. So I'm talking about like at least 15 minutes, 5 minutes. Because market will easily get there. If you are targeting the 4 hours, market will respect some minutes before getting to that 4 hours time. Even if you will get, but if you don't have a strong psychology, your mindset will be messed up. You get me? Your mindset will be messed up. If I analyze, just like I analyze this channel from 30 minutes and 15 minutes, if I analyze this analysis from 4 hours, and this it must definitely play out. I do execute sometimes if I analyze 4 hours and I wait for market to get to the 4 hours. So yes, right. But I'm telling you that the safest place to really make quick money and be hitting TP consistently is when you are targeting the lower time frame. So, but get the zone from 4 hours, but target the lower time frame from taking your profit. The main zone you are entering now is from the 4 hours and 1 hours, right? But to hit the profit easily, target from the lower time frame, which is that you are getting the strong zone from the 4 hours, but you are taking profit from the lower time frame. It will give you a rest time of mind. That's what me say. If I really want to master it. Sometimes I do still like trying to be great to be waiting for the 4 hour time frame to hit all daily. Markets sometimes they respect it, but it will mess with my psychology for days before playing out. So well, that is for that. And just I hope what I'm saying in this video will get to it and you understand it. And what you don't understand to you let me know. And setting my Fibonacci retracement. So how I set my Fibonacci retracement. Like I said before, well, if you have a Fibonacci, you have to click on it, draw the line, then double type the Fibonacci. Once you double type the Fibonacci, you see how I said the digit number. One number here is 0, the other one is 0.25, the other one is 0.5, the other one is 0.75, the other one is 1. So you just have to take a clear look at it and set it like this. So that you will understand, so that you will get my Fibonacci correctly, right? So that is for that. So this is my analysis for gold for the upcoming week. So today is Saturday. Let me show you some other pair. You see that all my strategies the same. silver. You see, this my analysis on silver. This was the silver I was showing you when I made the first video. You see, I told you that if I have any reason to leave this chart, I will leave. So I see that markets has already created a pin bar rejection here with a bullish candle. So all those things you need to pay attention to what market is creating. Market creates a pin bar rejection here. So I feel that I guess this market will not likely push down again. So created a pin bar rejection, created this bullish rejection. So you see that market is already created and it's on a zone. It's not just creating the pin bar rejection from a random player. It's creating it from a zone. That's what I told you from the first analysis. I said once market is creating a pin bar rejection, watch out if it's creating it in a zone. If it's creating a zone, know that I'm supposed to leave this market. So now that's how this a very good trade over one ratio four, 1:4, almost 1:5 trade, with a good win rate over 300 to how many pips say over 200 pips and about 200 pips. So the trade was really interesting. And even silver is volatile. If you take this trade, you will you make crazy money because this trade is really cool. This trade is really cool. This trade is that trade is really cool. So if you see the silver as well, this is what I'm expecting for silver too. You see, like I said before, market market break this structure. Market break the structure, and in this scenario, market returns back to this structure. Yeah, market validated the structure, so market can easily push back without creating liquidity. But me, I don't enter market if without seeing the liquidity. You get me? So market in this zone, in this scenario, so I don't enter market without seeing a liquidity sweep, which is market to take out the early people. So market move up, retest, like I draw the line where it retested back first. But I'm expecting market to take them out to get to this setting place, to this setting line, and before moving the move. So here was the here was where market retested back to, so push out from here. So I'm expecting market to come like this. So I'm expecting market to come like this as it take out them. So see, many people will be like, okay, let me place SAB below the fair zone. So that's how market fake them out. So that is why I mark it as liquidity. Market will fake they are trigger me from this third Fibonacci line, as I said before. Market will trigger me from this third Fibonacci line. Then you see it then now hit TP to create another break of structure. That is how market move. That's why any movement market making, there must be a little boss inside. If you look at this thing now, this was a little boss. Market take the out and move impulsively. Now this a little boss, market will still take it out to move impulsively. All these little boss, all those are manipulation that market creates. See, market will create a little boss. Market will create a little boss, little zone. Market will create a little zone, then fake them out to move impulsively. That is what market do to fake people out. Now market created this little, so you see that it will retrace back and fake them out and create impulsive move. So I'm expecting buy on gold, I'm expecting buy on silver. So if you want to trade silver, be careful. Be careful trading silver. Silver is far volatile than gold. If you are even using 0.01 on silver, you will lose. Like you will be risking massively. So if you have low capital, if you use 0.01 silver, and you will still even give you big essay. By the way, silver is really volatile. Don't use more than 0.2 or 3 if you don't have strong capital. 0.1, 0.01, 0.02, 0.03. And if you're able using 0.03, you need to have a strong capital because silver is 10 times volatile than gold. If you are making the money you are making on silver is bigger than the one you are making on gold. Silver easily give you big profit and give it can easily give you big loss. So I trade the two pairs. That's why I'm telling you this. So be very cautious before executing trade on silver. If you want to really know how silver is volatile, you can even try it on Dembo to see what you are supposed to risk on a trade. Silver is volatile. I've said this a couple of times now. Silver is volatile than gold. So what I'm expecting again for this week, let me check US 30. See, you see why I did not take this US 30? I told you that market must respect my analysis. If market does not respect my analysis, even if I see the criteria to enter, I won't enter. I don't want to jump on the trade. So if I'm to enter this trade, I have a reason to even say I will enter this pin bar rejection, right? Because market retested it because market just creates a pin bar rejection. And this is a zone. So I might say, okay, let me enter, then I will make profit. But I don't just enter trade like that because I told, like I said before, market must create a break of structure. So here was the market. Here is where market creates a break of structure. So I was waiting for market to retest back to inside the line, but unfortunately, market did not retest back. Market just started moving down. So I missed the trade. Yes, I missed it. It's good than to miss a trade than to take a trade that you will lose, right? Or that you will take a trade that you not have confidence in it. So this is my US 30, but the analysis, plays out. So this trade is a swing trade. So this trade finally got to TP safe. So this trade is a swing trade, like I said before. How I caught this trade, how I caught this trade is the same strategy time after time, time after time. Let me change color of this so you know. You see what I'm saying as well. I told you that I always want market to take out the first bias. This was a 4 hours analysis. You get me? I already know that. Okay, I already know that like this trade is moving in impulsive mode because this was the low, this was the high, higher low, higher high, higher low, higher high, higher low, higher high. It is breaking structure. I did not take the trade from there because I don't basically trade currency pair often. You get me? So then gold was moving so crazy in a set time. So I said, okay, let me go and look for entry in currency pair. Let me go and look for entry currency pair. That's how I miss all of this. So now looking entry in currency pair, then market break structure. I use this break of structure in this zone because I already know that this market is moving impulsively, right? I use the break of structure in this zone, right? Then I mark out the break of structure. So market broke the structure. Like I said before, the first zone that market retested back, that's why I use as the liquidity. Market retests back to this zone. As market retests back to this zone, now you see that it created a like movement, which is a hammer candle that I want to go up. So market go up. Then if people is really targeting this resistance, they will easily make money. But if they say they want to hold this long beta to create another break of structure, you see that the market will sweep them out. So now market get to here, sweep them out. I told you that without market sweeping them out, I will not enter the trade. Without market sweeping them out, I will not enter the trade. So market sweep them out, then give me a entry from this point. Give me an entry from this. That's how I enter this candle. That's how I cut this trade. It's about 200 and something plus pip, about 1 ratio 6 trade. So you get me? 1 ratio 6 trade. Not just 1 ratio 3, 1 ratio 6 plus trade. So I was trading about 37 pips and cut over 232 pips. So you get me? So that's this is a higher time frame. So that like you will understand what I'm saying is like adorable. But the reason why market did not get to this zone, market did not get to this third Fibonacci to respect. So because market break is in some scenario, market might not get it, it will break above, it will break it below, or it will not get it, it will be above it. So market break it. So I know that okay, market will break this. So let me use this order. So then that's how I call the move. And here is a key level. If you look at here, key level, key level, key level, key level. This is how I call this move as well. This move I called was a break of structure from here too, or a break of structure from here. But I use the lower time frame to cut this very move here. If I go to the lower time frame, you see clearly what market is creating. So that's for that. This video is really long, so I want to make sure you understand a lot in this market. See it, GG, the same GJ, same analysis, same time, same day. So same analysis, same time, same day. Break of structure. This was a break of structure, right? This is a break of structure, right? Market, with market create a break of structure, make this move. Market created a break, so you're retested back to this place and created small and wipe them out. So me, I did not even enter from me. I did not even use enter from here using like this rejected back market rejected at the first place. So me, I waited for market to get here. Then I was still like these markets have already mitigated this inner structure. So then I did not just enter at the time. So I wait for market at least. I wanted to know that if market is going to clear as liquidity. So then I waited if market will clear as liquidity. Then when I enter that is that when market rejected with this candle here, when market retreats back and rejected with this candle here, then I know that this is a key level. That's how I enter this market to cut this move. It is 200 and something people as well. It is 200 and something people as well. So that's how we cut the move to, which means that I waited for market to retest it back here 2 times. I waited for market since the liquidity was no, like it did not create a clear liquidity busting in. But if we go to the lower time frame, this where this where I'm supposed to use when market created the first liquidity. This way I'm supposed to use. You get me? Market created a break of structure here. Market break a structure here, then retrace back. So yeah, this is the zone I'm supposed to use like this very zone. So let me mark it out. So I will wait for market to take them out. Once market take them out, once market take them out, so market drop intuitively to take them out. So once market take them out, once market take them out, so I will wait for entry. So here was giving me the entry. You see a rejection here on engulfing candle. So before you know, you enter from here. If you enter from here now, you are making quite impressive profit. But I did not just enter from there because I was like, let market balance down. So I waited for market. See, there is the zone I was telling you about before. So I waited for market to retest back to the zone to give me a full confidence entry. So when market retested back to zone, and then I started here, there are still a double bottom, right? A double bottom. So market retested back here, which is giving me a chart pattern that a double bottom. So hitting profit now, which is breaking out the neckline. If market retraces back for here, now I don't know if market want to continue this impulsive move because there is too much range here. So if market can easily push back and break another structure, then we look for another strategy, another analysis for this pair. So that's how I cut that. Thirdly, so that would be for now. So I don't think so. This video is surely getting too long. So all my strategy is to say time after time you get to know it. So and as I'm analyzing too, I'll be keeping you posted time after time. So all at the same you see it. So it's how we call some move. But some are analyzing lower time frame, some analyzing higher time frame. I analyze on lower time frame sometimes, especially 30 minutes, 15 minutes. I do analyze on 30 minutes and 15 minutes. You get me? So it's some scenario I do use 15 minutes and 5 minutes. So if I want to Skype, so that is for that. If you go to here now, you see what I'm doing here on this chart. See what I'm doing here on this chart. So I'm expecting market to respect it. This is a USD CHF. But if I go to higher time frame, you see that okay, I can literally use this zone tool in the higher time frame, and it will still give me same thing, but then it will give me a long time to play out. So that's the reason why sometimes I use lower time frame just to catch the move easily and get out of the market. So that's for that, which is US 30. No, US oil. I mean, this is US oil. So I'm still expecting same way, same analysis, same move. So next week is going to determine how our trade will be. We pray that next week should favor us. So God should build up our mindset to understand it more clearer and to make a living from it. You get me? So that's for it. Anything you don't understand, you can still keep me updated and I will still explain it to you. So that's for that. Have a nice time. See you in the next video.